think there's a valid reason to have high expected returns on Bitcoin, um, based on historical returns.
Not just on historical returns. I mean, I employ a number of analysis methods to determine what I expect Bitcoin to do. I still think that the total addressable market of what Bitcoin can address is much larger than the current size. From in my expectation over the next 5, 10 years, I do expect Bitcoin to still have high returns. Now, not the returns that when you go from $1 billion asset to $1 trillion asset. But I certainly think it can 5x and 10x from here, and we'll see how the numbers shake out in the years ahead. And it's also the risk situation is different than before. So when Bitcoin was tiny, it didn't even have the liquidity for like a corporation to buy it. It didn't have the regulatory clarity in many cases either. And so now that the tax treatment of it has improved, regulatory clarity has improved, and it's a big and liquid enough asset, the expected forward returns are not as explosively high by most analysis methods than they used to be.
Lyn Alden dives into Bitcoin treasury companies like Strategy, Ponzi, or leverage play. Let's watch and uncover the truth together.
Well, I would say that unlike an ETF, MicroStrategy and other treasury companies that are operated well tend to increase their Bitcoin per share through these strategies, through this kind of debt and equity issuance strategy. And so you're paying a premium over the Bitcoin they have, but then you're also expecting this per share Bitcoin to increase. Now, there's different ratios that analysts have come to use, basically trying to figure out how much of an MNAV to apply based on forward, how much they expect Bitcoin increase per share. I've actually raised the concern that the problem with that is it's recursive, because the higher their MNAV is, the faster they can increase their Bitcoin per share. And so that flywheel is really good on the way up, but can also just unravel very quickly when sentiment changes. It's different than, say, evaluating a company based on cash flows from operating a pipeline business or something. And so while there's merit in that analysis, it's a new form of analysis, and it's inherently just challenging. My general view has been that I don't know what the right MNAV is. It certainly depends on the company. For example, Metaplanet is smaller, is in a jurisdiction where there's a really big tax arbitrage, which is different than the United States. So that they're actually tax advantaged there. And they started from a smaller base, so they've had very high MNAV and have grown very quickly. It's come down more recently. So I think that MNAV is somewhat context dependent, partially based on how much you expect them to be able to kind of arbitrage this. Generally speaking, as they get bigger, we should expect the MNAV to gradually compress, because trees don't grow to the sky. Now they can continue growing. It's just that after a while, that MNAV generally starts to compress. That's so far what we've seen in the market. But I do think that an MNAV above 1 makes sense when you can attach this longer duration debt to Bitcoin, and therefore get through periods of cyclicality, at least if managed well and conservatively, compared to the way that hedge funds lever, the way that retail investors might lever. And so I think it's worthy of a premium. I would like to see eventually more cash flow generating businesses have Bitcoin on their balance sheet. The kind of history of this space, so MicroStrategy did the approach. They actually then ran a number of conferences called Bitcoin for Corporations, trying to get other corporations to do it. We saw Tesla dabble in it. Block got in to some extent. We didn't really see a lot of other companies with existing operations decide to add Bitcoin. Instead, in this cycle, we've seen a number of companies that kind of spun up to do the strategy, as well as increasingly around the margin, some existing companies do it. So I think there is a bigger market for companies that just use Bitcoin as a treasury asset while also having separate cash flows. But then clearly there has been demand for 5 years now, and I think ongoing, for a levered kind of pure play Bitcoin entity. And then I think the main questions to ask are, how do you value that? I generally err toward conservative. And 2, how do you manage the risk so you don't have a very large blow up, especially among the larger ones in the market?
Bitcoin's latest rally is facing turbulence as analysts warn the next stop could be $95,000, well below the $100,000 level that many considered a firm support. Using Wyckoff analyses, traders see signs that the market may have shifted from a bullish markup phase into a bearish distribution phase, the point in the cycle where momentum fades and prices often reverse. Zake charts highlighted that after a strong accumulation period earlier this year and a powerful breakout to new highs, price action is now showing sideways movement with weakening strength, alongside bearish RSI divergence. If this distribution confirms, Bitcoin could enter a markdown phase, potentially sliding toward the $95,000 zone, a level not seen since early May. The area between 92,000 and 95,000 has played a major role in Bitcoin's recent history, switching between support and resistance during major swings since last November. This week's attempt to break above $122,000 ended in what trader Mickey Bull Crypto called an ugly rejection, pushing BTC back into its previous trading range and shifting short-term momentum toward altcoins. Adding to the pressure is the looming CME gap near $117,500, which trader Dawn Crypto Trades notes could align with key moving averages on the 4-hour chart. With the US CPI report just hours away, volatility could surge and the next big Bitcoin move may come sooner than expected.
Sure. I mean, there's a number of points there. One of the earliest ones was why Bitcoin? Why buy Bitcoin with cash? Historically, the answer is because it's the best performing thing you could buy with your cash, pretty much. And then the thesis going forward is that it's going to continue to be either the best or one of the best things you can do with your cash, especially that it's not a security. So there's with U.S. stocks, there's kind of a limit on how much securities you can have in your asset mix. It doesn't apply to Bitcoin, which is a digital commodity. And so the combination of high expected returns based on those who, generally speaking, those at strategy and those who invest in strategy are bullish on Bitcoin. So I certainly wouldn't recommend a Bitcoin treasury strategy holding for those who just aren't particularly high conviction long-term bulls on the asset.
Ether is walking a tightrope near $4,300 as short-term holders step up their profit-taking after a powerful month-long rally. Up 43% in the past 30 days, ETH's climb has tempted traders who bought in lower to cash out, with on-chain data from Glassnode showing profit realization averaging around $553 million per day over the past week. Most of that selling pressure is coming from short-term holders, hinting at expectations for a pullback. Long-term holders, those who have kept their ETH for more than 155 days, remain calmer. Their selling levels are similar to December 2024, showing they're less concerned about short-term volatility. Even with current profit-taking, daily realized gains are still 39% below last month's peak when ETH was trading closer to $3,500. At $42.85, Ether is still about 12.7% shy of its November 2021 all-time high of $4,828. However, data from Glassnode warns that around $2.23 billion in positions could be liquidated if ETH nears $4,700, adding a layer of caution. Institutional interest is quietly growing, with companies now holding over 3 million ETH worth $13 billion. Yet analysts remain split on whether ETH can break $4,300 convincingly. Every brief push above that level has been met with quick sell pressure, keeping traders on edge. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoin Zella for daily news, all for free. That's all for today's video. Until next time.